Hello, this is Thomas Johannsen from Johannsen Group Mortgage. Just going through how to use a mortgage calculator today, as that's pretty critical when you're trying to figure out how much you want to pay looking at different homes. So, this video will be specifically covering FHA mortgages. There's some different considerations for FHA versus conventional mortgages, VA, USDA, and others. So stay tuned if you're FHA, and I've got some other videos for those other types as well. First things first, you want to just find the right mortgage calculator. I'm a big fan of mortgagecalculator.org. It's pretty simple, but also effective. A lot of great, visualizations if you're into that sort of thing, but certainly all the boxes that we need. So they got this amortization table up here with years. That you can come back to that. It's nice if you want it, but getting into the nitty gritty. So let's say it's a $300,000 home, just for that purpose. You got to decide what your down payment's going to be. Now with FHA, the minimum percentage is 3.5. So that's what we're going to do there. But certainly if you're doing more than that, you could put in an actual dollar amount as well and say, let's say $15,000 or something like that. It's close to 5. So that is 5. So 3.5. It automatically will calculate your loan amount in turn. And interest rate's going to be based off of what I give you for today's rates, or if I've already quoted you that. If you have not gotten a quote from me quite yet, you can just go ahead and use whatever they fill in. It's usually going to be pretty close to what the national average is, more or less. And it is indeed pretty close to 6.7% today for FHA. Let's see, it's February 16th, 2023. It's not, of course, a quote, but just a reference point. The loan term, of course, is also important. Most people are going to be on 30-year mortgages for a new purchase. You could do a 15, you could do 20 years. You can change that up if that's something you're interested in. Of course, as the term decreases, the payment goes up. The start date really doesn't matter as far as payment, but it will give you more accurate dates. It'll give you the accurate date for when your mortgage is going to be paid off, and then this amortization table up here, which shows the proportion of how much you're paying towards principal per year. That's the darkest blue area, and interest. That's the more teal color there, and the light blue is going to be your taxes and fees. Something you really want to keep in mind is taxes and fees are estimated to be fixed, but those do change. Property taxes go up both because the value of your property should be expected to go up over time. Also, the county could or community could end up increasing your taxes as well. And definitely keep those things in mind, as well as insurance can go up over time, just with the property value itself and other factors for insurance. So it's assumed to be fixed there just because that's harder to calculate. But yeah, moving onward, we'll just keep it as February for there. Property tax. How do we actually figure out what property tax should be for a $300,000 property or whatever it might be? So let's just go here. Oh, this one's pretty close. Oh, that one is 300K. Here I'm in Anoka, Minnesota, just as an example. Different counties are going to have different rates of taxes. So you can certainly just look at some example properties, and I'll show you exactly how to find the property taxes. It's a good place for you to check them out. So I like Redfin or Realtor.com. You hear me talking about that all the time. Not a fan of Zillow, though they have some nice features. I just really don't like them as a company. I don't think that they have basically people's best interests in mind. They're trying to do everything and don't do a good job at it. So definitely Redfin's a much better option. Realtor.com is connected with the National Association of Realtors, so always want to give those shout outs. Sale and tax history right here when you're on a property for Redfin. It's just one of the top options. You can click on that. You get right down to the sale history, which is also nice. So you can see, okay, how long has this property been listed? Looks like this one's actually been listed for a little while. It was pending and never sold, and now they've come down a tiny bit in price. It looks like they've pretty much stuck to where they were, and it was last sold there in August 2021. But we're not interested in sale history. We're interested in tax history. So if you click on taxes, that's where you can see this. And there you go. Looks like 1810 was the annual tax. You just got to do some quick math. You can grab your, old school TI-83 if you got it. Of course, every computer has a calculator as well. So you just search for calculator from the Windows key. I did that on another monitor, but here I'm pulling it over. And my computer is running very slow right now. So luckily, nothing we're doing is too intensive. But when you're originating, you got lots of software open, and I probably should have closed some of that. All right. So 1810 divided by 12, we're right about 150. Let's call it 151, and that is the dollars per month. And you know what? It just needed the dollars per year. So what was that? Pardon me, 1810. There you go. We'll throw in 1810. That's the dollars per year. PMI. Now, what is that? That stands for private mortgage insurance. MIP is mortgage insurance premium. Don't worry about the difference between those two because they're effectively the exact same thing. They're mortgage insurance, though one is for private, for conventional, pardon me, loans, and the other is for FHA loans. So we are talking about FHA today, and that is typically going to be 0.85%. It does go down to 0.8% when you have at least 5% down payment. So you'll hear me oftentimes talk about potentially considering a 5% down payment on an FHA loan just to get that down a little bit. But yep, 0.85% for FHA loans. Homeowners insurance. Now here, you're really going to come into much more of a subjective measurement, both based off of the property itself, depending on the features of the property, how old the roof is, boiler, all kinds of appliances, things like that. Also, your credit score ends up impacting your homeowner's insurance a lot. So you hear me talk about the importance of getting credit as high as possible, not only related to the mortgage purchase, but ongoing. I'm very big on educating financially however possible, including on improving credit and getting it up above 780 and keeping it above 780 for the long term. It's going to help you in your car insurance, homeowner's insurance. If you insure other things like jewelry, it's pretty common. So yeah, basically, what do we actually do though in the end? Well, I like to be pretty conservative and just estimating usually around 150 lately a month. A lot of times you'll see it much lower out there, and certainly you could do that. But I always recommend actually talk to an insurance broker to get an idea of what your coverage would look like, how much it would cost, and you could always just again choose a particular home and say, hey, here's this home, 220, 2224 4th Avenue in Anoka. What would it be like for me to insure that? Now, they will need to know some features like the age of different aspects of the property that they probably won't know, and you could just ask them to estimate, a little bit on the older side, say 15 years for the roof and furnace and things like that. So it's a little older, but not super old. So, somewhere in that range is pretty common on average. And that they'll give you a pretty good idea about where you should land. And I can certainly tell you like what our minimum standards are for insurance requirements. But again, 150 a month is pretty good as far as a going rate, just to be conservative, so that if you end up coming a little higher or a little lower, it shouldn't be too far off that. And most often, my clients are coming lower than that. HOA is homeowners association. That is going to be required if you have a townhome or condo most often, as they basically charge an extra fee just to manage the property itself. Like think of the external features of the property, the common areas, stuff like that. Those are all going to be part of the homeowners association fee and management itself. Now, you do benefit when you get something with an HOA very often if they're covering those outer parts of the property, that it tends to also in turn reduce your insurance pretty significantly. In that case, you can more or less cut that in half. So it'd be $900 there instead of the 1800. But we're going to assume zero there. So most of my clients like to start off and say, hey, what would the cost be for buying a house with no HOA? And then I, of course, have tables that I create and send out for all of that when there's HOAs. How does that impact your maximum monthly payment? So loan type FHA, monthly HOA 0. We don't want to click compare loan types. We just want to click calculate. All right. And here we've got our monthly payment. In this case, it's $23.73. It shows how many PMI payments would be made, and PMI until March 2034, and on and on. You know, I'm not 100% that this is FHA. I have to double check because I think that you really have to cover FHA PMI longer than that. So I'm thinking this calculator is assuming that's a private mortgage insurance. But nevertheless, you get everything there, and now what we can just do is adjust the home value. Let's say it's 225. Okay, that's pretty solid. And of course, the property tax is not going to update. So we could have figured out before I did that, pardon me, approximately what that rate is. Calculate that. And that does seem on the low side. So you'll see me typically also recommend 1.2%. So that's what the actual rate would be. So we say 300, 1, 2, 3, and 1.2% of 300 times 0.012 is 3,600 divided by 12. Hey, look at that. It's 300. So basically, if you have a $300,000 house, I typically like to recommend assume 1/1000th of that per month. So instead of that, we would say 3,600. Now, why the huge discrepancy? If we go back to this house and we look at the tax, if they would show it, I doubt they will here, but you can look at where the assessed value was still mentioned and taxes weren't much lower. Taxes were based off of a $113,000 assessment for this property. Now remember, they're trying to sell it for $300,000. So chances are quite good that this could jump up pretty high once you buy the home, and you know we're in 2023 now, so 2024 it could get reassessed, and that's where I want my clients to be prepared for that higher payment, right? So actual payment might end up being a bit lower if it's already been assessed. It's probably going to be higher than 1810. We've had some appreciation this past year that will show up on taxes, but just wanted to go through that. So 300, let's go down to 225 like I had mentioned. And remember, I mentioned 1/1000th of that per month. So if I open my calculator again, 225 times 12, 2,700. I put that in property taxes. I didn't mean to do that before. There we go. I put the property taxes and homeowners insurance. So now we click calculate. All right. So now we're at about 1929 for that 225 house. Again, of course, interest rate's still at 6.7. So let's say we get some great news. Inflation's coming down. We expect that to happen next month with CPI in mid-March 23. So let's say we get down to 6%. I'm very optimistic right now. And look, now the home price is at 1830. That's fantastic. So you can play around with this. Let me know if you have questions. Adjust things as you need, of course, for the property, and happy to help if there's anything I can possibly do. Again, this is Tom Johannsen from Johannsen Group Mortgage. Have a good one.